Good morning, students. Welcome to Multinational Financial Management online class. Today we will discuss about the capital asset pricing model and we learn the uh, principles and the functions of capital asset pricing model. Basically, we learn how to calculate the cost of stock with the help of a capital asset pricing model because this model help us to find out the cost of stock or cost of equity, right? So, capital asset pricing model is it represent the expected or required return from an investment in asset compared with the risk. Okay, so basically this model, the capital asset pricing model, is used to calculate the cost of equity and we mostly use this model to calculate the cost of stock. And it is a very important method to calculate the cost of equity. Why? Because when you are raising your finance to equity, you need to know how much you need to pay back to your investor, right? And how much is the minimum required return which you need for your investment. So basically, this model, the capital asset pricing model, help us to identify the minimum required return, the return in our investment. So this all involved in the cost of equity. So we need to understand what is the minimum hurdle rate to be crossed, and capital asset pricing model helps in representing the expected or required return from an investment in assets as compared to risk involved. So, capital asset pricing model not only help us to find out the cost of equity, it also help us to find out the risk involved in that particular investment. Right? As you can see in the screen, it is mentioned that it represents the expected or required return. Okay. So, first thing, this model help us to identify the expected or required return on our investment. Okay, and with that, it also help us to compare with the risk involved. What are the risks involved in that particular investment? Because when we invest in equity, what equity means? Means the high risk and high return, right? जितना ज़्यादा इक्विटी में रिटर्न इक्विटी में रिस्क जितना ज़्यादा है उतना ज़्यादा रिटर्न भी है हमारे लिए. So basically, cost asset pricing model help us to identify or calculate the cost of equity and also help us to identify the expected or required return from an investment as well as the risk involved in that particular investment. Okay, and this model takes into account the asset sensitivity to market risk because the risk that involved in that investment is come from the market, mostly come from the market. So this model take into account the asset sensitivity to market risk, right? Often represented by the beta, as well as the expected return from the market and the expected return from a risk-free assets. Okay. So when we see the cost asset pricing model formula, we get the clear picture about what these things are. Is the beta and the expected return and the risk. We will discuss this all things under the formula of the CPA. Okay. So, used for the pricing of assets and generating the expected return out of it. This will help us to find out the pricing of assets and generating the expected return out of it. And this is one of the most widely used models to calculate the cost of it. Okay, most widely. Why most widely used? Because there are some other formula available for the calculation of cost of equity. We can say that CPA, the cost asset pricing model, is not the only model or method to find out the cost of equity. There are some other models are like multi-beta model, like the dividend discount model. Okay, but mostly this cost asset pricing model is used to calculate the cost of equity. So remember this that when we use the method of cost asset pricing model, basically we want to we calculate the cost of equity, we expecting the required return from an investment as well as the we identify the risk involved with the help of the formula of the cost asset pricing model. So the three most important input in cost asset pricing model formula are: Okay, what are the three input, most important input? That is risk-free rate, because we all as an investor want to invest on those equities and those securities and those financial instruments which give us risk-free rate, right? And then is beta, and then is expected market return. So these three inputs are very important for the cost asset pricing model formula. The first one is risk-free rate. What is risk-free rate? Risk-free rate is the interest rate arising from secured assets like government bonds. Okay. So whenever we invest in a secured bond assets like government bonds, okay. So government bonds means less risk, less return. Okay, simple. You all know about it. The less risk means less return. So गवर्नमेंट बॉन्ड में इन्वेस्टमेंट करने के पीछे पर्पस एक इन्वेस्टर का क्या होता है कि उसे रिटर्न नहीं, उसे रिस्क फ्री रिटर्न चाहिए, राइट? रिटर्न भले ही कम हो, बट इट शुड बी इन अ रिस्क फ्री रिटर्न, रिस्क कम होना चाहिए. दैट्स व्हाई we opt for the government bond. So risk government bond, like bank fixed deposit. These all are the risk-free, secured, or we can say secure assets. Okay. So what would be the rate of interest in which you would be getting? Okay. So it is very important for us to know what would be the rate of interest in which we would be getting. Okay. So whenever you make an investment decision, you first try to measure that you need to have more than the risk-free rate, right? So these risk-free rates are like interest rate by all the safer and the less riskier sources. So less riskier sources. So you want to try to invest in the equity, you are expecting higher return because you are investing in equity. Equity में क्या है कि higher return है, but risk भी involved है. But because we want a risk-free rate, so we opt for the government bonds, we opt for the secure assets, right? So गवर्नमेंट बॉन्ड्स में हमें जो है लोअर रिटर्न मिलेगा, बट मोर सेफर ऑप्शन, राइट? हमें सेफ्टी ज़्यादा उसमें मिलेगी, रिटर्न कम मिलेगा मगर सेफ्टी ज़्यादा मिलेगी. सो कॉस्ट एसेट प्राइसिंग मॉडल में जो रिस्क फ्री रेट का मतलब यहाँ पे ये है कि दैट रिस्क फ्री रिटर्न रेट इज अ रिटर्न इंटरेस्ट रेट अराइजिंग फ्रॉम द सिक्योर एसेट लाइक गवर्नमेंट. तो हम यहाँ पर सिक्योर एसेट्स की बात करें जो हमें रिस्क फ्री रिटर्न. The next is beta. Beta is a sensitivity of fluctuations in the assets with a change in the market. As we all know that market fluctuation, the effect of market, जब market जब fluctuate होता है तो हमारा उसका जो effect है वो हमारे investments में भी आता है, right? Market up होती है तो हमारा investment भी up होता है, market down होती है हमारा investment भी down होता है. आपने 2008 का recession आपको याद होगा जहाँ पे इंटरनेशनल लेवल पर मार्केट में तरीके से डाउन चली गई थी और उसका बहुत ही गहरा इम्पैक्ट जो है इन्वेस्टर्स के इन्वेस्टमेंट्स में था. लोगों के इन्वेस्टमेंट जीरो तक हो गए थे और कई लोगों की जॉब्स तक चली गई थी, राइट? सो मार्केट फ्लक्चुएशन
मैम
is Shivam, whatever your question is, please write down in the message box. Okay, Shivam? Right? So beta is the sensitivity of fluctuation in the asset with the change in the market. So we can say beta is like it takes into consideration not just the individual risk involved in the assets in which you are investing in. It tries to compare it with the market risk. Okay, what are the market risks? Market is inflation, deflation. मार्केट में कैसी सिचुएशन इस समय चल रही है, किस पर्टिकुलर सिक्योरिटी में जो है डिमांड ज्यादा है, किस पर्टिकुलर सिक्योरिटीज में जो है इन्वेस्टमेंट ज्यादा है, right?
Ma'am,
So
I have written
suppose
down
that
my question in the comment box.
yes, Shivam, we will discuss at the end of the class. Don't worry about it. I will discuss all the queries and questions. Okay. And let's take an example. So suppose that the beta value is 1.20%, right? And we consider with 1% change in the market, and your asset is changing by 1.20%. So this is what the beta value is showing. So how much sensitive is your asset is as compared to the market fluctuations? Okay. The next is expected market return. Obviously, you are investing. आप investment कर रहे हैं तो आपका expected market return क्या होगा? Means
What if
estimated
beta is
return to be
negative?
earned. Shivam, we will discuss at the end of the class. Don't worry, Shivam. We will discuss. Okay, we will discuss all your doubts, Shivam. Just write down your doubts in the message box. I will discuss all your doubts. Okay, Shivam? Yes. So expected market return means expected return to
Okay,
be
ma'am.
earned. Yes. Expected return to be earned from the stock market. Means whatever we are expected from the market, whatever we are return expected return from a particular stock from the market. So these all three inputs are taken into the CAPM formula, and we will continue with the formula. Okay. So the formula is expected return from investment equals to risk-free rate plus beta of investment, and that is then multiplied by the expected return from market, and then subtract by the market risk. Okay. So let discuss it one by one. So yeah, expected return from investment. What is expected return from investment? Means if you are making an investment in a particular stock, right, or in a particular equity, and so what is the expected return which you are means which you want from the investment, and how it is that calculated? So we takes into consideration. So for that purpose, we take into consideration the risk-free rate, the beta of the investment, the expected return from the market, and market risk. Okay. So for calculating, for finding out the expected return from investment, we need to take the risk-free rate. What is the risk-free rate? Okay, so it gives you the idea of having at least what you could got by the investing any of the secured government, like secured government or bonds or the fixed deposit on the government securities. So the idea behind the risk-free rate is that least you would require for the loss of purchasing power because of the inflation. So it is very important for us to understand what is risk-free rate. Okay, and for that risk-free of rate, then we consider the beta of the investment. Beta of the investment, as you can see from the formula, that is a covariance of return in an investment, then return from the market, and divided by variance for return from the market. Yeah, you can see on this formula. Okay. So means beta of the investment means beta keeps you a more realistic picture because it is not only compare the individual risk involved in that asset. It's a single fluctuation, but it's take into consideration at fluctuation as compared to market fluctuation. How sensitive it is as compared to market. Okay, you can see from the previous slide that beta is a sensitivity of fluctuation in the asset with a change in the market. So here, what I'm trying to say that beta keeps you a more realistic picture because it is not only compare the individual risk involved in that asset, it's single fluctuation, but it's take into consideration that fluctuation is compared to market fluctuations. How sensitive it is compared to market. Okay, so if market is going up, so your asset your assets or your investment will goes up. If market goes down, your investment will goes down. So it is related to the sensitivity. Okay, how sensitive means how sensitive is your market with your investment. And then is it is a expected return from market. So what is expected return from market? Yes. So what is expected return from market? So expected return from market means looking at the market movement, like the prices you decide. What should be the expected return from the market, looking at the trend in the past years, all those factors are included in the expected return from the market. Okay, and market, what is market risk premium? Market risk premium is simple. You deduct the risk free rate from the expected return from the market, or we can say that the risk free rate minus from expected return from the market. Okay, so this is the basic formula. This is the formula of CAPM, that is the cost asset pricing model, and we consider all these points into the formula. That is expected return from investment, then risk free rate, then beta of the investment, then expected return from market, then market risk premium. Okay, so let's take an example. There is a 10-year government bond of 7%, and expected market return is 9%, and beta is 1.2%, right? 1.2. Okay, so for that, according to the formula, as you can see, that risk-free rate plus beta for investment multiplied by expected return from market, and then that is market risk premium. Okay. So first of all, what we will do, we will find out the market risk premium, that is expected market return minus risk free rate. So as you can see from this screen, that the market return is 7%, okay, and the risk free rate is 9%. So when you subtract it, you will get the market exposure, that is 2%. Okay, and after that, expected return from investor is this one, this one. Okay, for that, what we are doing here, we are adding the, yes, the 7%, then the beta, that is 1.2, and then multiply by 2%. That will be 9.4%. Okay, so this is the expected return from your investment from this. For the 10-year government bought the 7%. Okay, so you can see that this is a good position. Okay, because we are expecting a return from investment that is 9.4%. Okay, so you can say that it is a good return. Okay, now I'm giving you a short question for this. आप सभी लोग मैसेज बॉक्स में देखिएगा, मैं एक क्वेश्चन आप लोग को दे रही हूँ. One second. This message is visible to all of you. This message is visible to all of you.
Yes, ma'am.
Yes, ma'am.
Okay. One second. PMR is a expected market return. Okay. Yes.
मैम EMI 8% है ना?
Yes. Oh, sorry. It's a percent. It's not an percent. It's a percent. Yes. Typing
Okay,
it.
ma'am.
Yes, it's a percent. Okay. And, okay. Is it visible? The 15-year government bond is 6%, EMR is 8%, and beta is 1.2. Okay. What what is CAPM? Okay, this is a cost asset pricing. One, let's see. Find out. Yes, find out the answer and drop your answer in the message box. शिवा में निशांत, आप बच्चा आप सभी लोग अपना आंसर डिटेल में सेंड करिए, सिर्फ आंसर नहीं भेजिए, आप डिटेल में सेंड करिए, आपने किस तरीके से जो एक फोकस ओके।
मैम की वॉइस कट कट के है।
Just look at your notes. Yes, students. Shivam and Nishant, got my message or not, beta? Shivam and Nishant and other students.
Yes, ma'am. Yes, ma'am. Yes, ma'am.
Yes, yes, beta. Send your detail answer. किस तरीके से आपने कैलकुलेट
Okay,
किया है
ma'am.
इस आंसर को वो आप मुझे
Okay, ma'am.
yes.
I have shared my screen.
Yes, Shivam, your screen is visible to me, but your answer is not visible, beta. Just drop your answer in message box, beta. It's not there's a blank screen. Okay, okay.
मैम
Okay, Shivam.
एनोटेशंस कैसे टाइप होंगे?
Okay. Share your screen again, Shivam. It is showing me the blank screen.
मैम इज इट नॉट?
Shivam, your screen is not visible.
Okay, ma'am.
Your final answer is
But I have solved the answer, and I
8.4.
think
Shivam, your final
percent.
answer is 8.4%, right? Okay.
Yes, ma'am.
बेटा आप मुझे एक्सप्लेन कर दो क्योंकि आपका स्क्रीन मुझे क्लियरली विजिबल नहीं हो रहा था। आप मुझे एक्सप्लेन कर दो शिवम।
मैम मैम जो रिस्क फ्री रेट है वो 6% है, बीटा की वैल्यू 1.8 है, एक्सपेक्टेड मार्केट रिटर्न हम लोग 8 के चल रहे हैं। तो हम लोगों ने बस डायरेक्ट सारी
अच्छा शिवम मुझे
CFAM के
शिवम।
फॉर्मूले में वैल्यूज रख दी।
यस।
यस मैम, पूछिए।
मैं ये पूछ रही थी कि आपने कहा कि मैम ये सिक्योर्ड वो है सिक्योरिटी बोली आपने जो मैंने 6% आपको बताया था।
नो मैम, 6% सिक्योरिटी नहीं बोली।
हाँ
6% आपने वो बताया है ना, रिस्क फ्री रिटर्न।
लिखा हुआ है जो क्वेश्चन में लिखा हुआ 15 ईयर गवर्नमेंट बॉन्ड टू 6%। क्वेश्चन में देखो लिखा हुआ
तो मैम
15
गवर्नमेंट बॉन्ड
ईयर
रिस्क फ्री
बॉन्ड
सिक्योरिटी है
इज
ना, तो
6%।
6% रिस्क फ्री रिटर्न ही तो होगा।
ठीक है आगे।
मैम एक क्वेश्चन है।
ठीक है ओके। उसके बाद आफ्टर दैट किसने ऐसा किया है? जहरा एंड अनुष्का दुबे।
यस मैम।
अनुष्का दुबे। यस अनुष्का,
यस
आप
मैम।
अपना आंसर एक्सप्लेन कीजिए। एक्सप्लेन योर आंसर बेटा।
मैम 15 ईयर गवर्नमेंट बॉन्ड आपने बताया था 6% और EMR आपने बताया था 8%, बीटा 1.2%, जिसमें हम MRP पहले निकालेंगे एक्सपेक्टेड मार्केट रिटर्न माइनस रिस्क फ्री रेट से। एक्सपेक्टेड मार्केट रिटर्न हमारा 8% है, माइनस रिस्क फ्री रेट है हमारा 6%। 8 माइनस 6% कर देंगे, हमारा आएगा 2%। देन हम निकालेंगे ERI इज इक्वल टू RF प्लस बीटा आई मल्टीप्लाई ERM माइनस RF। ओके मैम, तो हम फॉर्मूले के अकॉर्डिंग अपनी वैल्यूज रख देंगे 6% प्लस 1.2 इंटू 2%, जिनकी टोटल वैल्यूज आएगी 8.4%।
ओके दीपा सिंह। दीपा सिंह कैन यू हियर मी?
यस मैम।
यस दीपा।
मैम जैसे आपने बताया था कि हमारा गवर्नमेंट बॉन्ड था, मतलब 6%, और कितने एक्सपेक्टेड मार्केट रिटर्न था वो 8% था। तो मैम एक्सपेक्टेड मार्केट रिटर्न निकालने के लिए हम लोग ने माइनस किया तो हमारा 2% आ गया। फिर एक्सपेक्टेड मार्केट रिस्क प्रीमियम के लिए हमने वो हो गया, हमारा आ गया एक्सपेक्टेड रिटर्न फ्रॉम इन्वेस्टमेंट के लिए हम R1 प्लस बीटा इंटू ERM प्लस माइनस माइनस यस मैम, फॉर्मूले में पुट करके हमारा आंसर आ जाएगा 8.4%।
प्रवीण। काजल जायसवाल।
यस मैम।
यस प्रवीण।
यस मैम। यस मैम, जैसे आपने बताया था कि 15 ईयर गवर्नमेंट बॉन्ड है 6%, ये हमारी रिस्क फ्री सिक्योरिटी होती है, इसलिए रिस्क फ्री रिटर्न इसको ले लिया हमने। और EMR आपने बताया एट
ठीक है
परसेंट
प्रवीण।
एंड बॉन्ड जो रिस्क फ्री 6% और बीटा 1.2% है। तो पहले वर्किंग नोट बनाया मैंने मार्केट रिस्क प्रीमियम निकालने के लिए।
ठीक
वर्किंग
है
नोट
बेटा।
नंबर 1 जिसमें ERM माइनस R1 करके 8 माइनस 6 दैट इज 2%। तो फिर फॉर्मूले में
ठीक है।
पुट किया EMR इक्वल टू R1 प्लस बीटा 1 मल्टीप्लाई बाई ERM माइनस दैट इज 2। तो 6% प्लस 1.2 मल्टीप्लाई बाई 2 आंसर इज 8.4%।
ठीक है। ओके। व्हाट अबाउट यू काजल?
थैंक यू मैम।
ओके प्रवीण। यस काजल।
यस मैम।
यस काजल।
मैम AMR हम लोग की 8% है और रिस्क फ्री रेट हम लोग की क्या वो 6% है। सॉरी बेटा जो है वो 6% है मैम। उन लोग EMR माइनस रिस्क फ्री रेट मैम माइनस किए तो इक्वल टू 2% आया। और ये
काजल नहीं आ
मैम
रहा आपको
मुझे क्लियर समझ में
समझ?
नहीं आया क्योंकि
हाँ समझ गई, नहीं समझ में आया। ओके।